Alright, cool. This week has been pretty much a shit show, to be honest. We're pretty much starting to range, not necessarily range, but pretty much stall. And that's pretty much just inclining me that something big is coming, like very soon. The issue now with DXY is like it looks like it wants to pull back up, but the only issue is we're still bearish long term. Like due to the fact, even just by this showing us how how much effort it's taking for it to pull back, it's showing us that there's obviously going to be a bigger impulse coming. So the only thing now is to try to get any decent type of retracement to at least equilibrium, hopefully to previous structure point. That's really what I'm kind of focusing on, trying to get back to a structure point there. Especially because this week might close very bullish DXY. So hopefully we actually get a a decent pullback. Nah, this is not accumulation, bro. This is just structure. Yeah, this isn't, no. Like, the only reason I'm inclining more to buys now in terms of here is, let me just start from scratch. It's due to the fact that this was already showing us a corrective nature, but more importantly, we had the structure break here. That structure break is pretty much inclining me that this wants to move higher unless we fail to break this high. But the thing is, since we're pretty much shifting in structure, although we're very low, it's not convincing yet. It's not convincing to me until this high breaks. And if this high breaks, I'll definitely want to see somewhere up here, which matches pretty much around, yeah, a little bit more deep than expected. I'd more so expect here in a previous structure point, but that's only a reference point. And just off the bat from this time frame, other than this inefficiency here, the only things appealing to me are potentially an SC there, or this inefficiency here, or potential SC here. That's the only thing appealing to me just off the bat. I mean, this is without me, fully looking into it. But I mean, obviously we've already broken levels of structure, so it's just a matter of seeing this continue. Because from a perspective of order flow, it's like, yes, we broke a high here, we broke the high, but we pulled back and broke down this low, took this low out, but I don't consider that a structure break to the downside. I consider that an inefficiency fill here. All right, you see that? So you have a pretty much structure point to reference that. I wouldn't use that. I would more so be more inclined to pay attention here and then see how the reaction is. And as you can see, the reaction was very nice. Although we didn't get it, during trading hours. That happened during London session. Actually, not London. Yeah, pretty much the end of Asian session and then impulse during London session here. And then we got pretty much good volatility during New York. Unfortunately, pulled back to 50% inefficiency here. Right, and this was last night's move, which was during London session. Took out its target, which was previous liquidity. Which was previous liquidity here. So that target has been met, but this correction is still showing like it wants to continue higher. And there's one high here, two highs here, three highs here that I can take out. And the only reason I'm also inclining into this is because we're building this bias based off the narrative that this already happened, right? We already had a reaction from a, previous point of inefficiency, had an impulse to the upside. The correction was very minimal, but you could see that the effort is pretty much taking a ton of effort in order for it to come back, which it reached 50% inefficiency and then continued the rally. So this next continuation here is also stalling a bit. So the only reason I'm inclined to, have this continue higher is the narrative built here, the bias built based off the reaction we got from this inefficiency, and all this would be a continuation. Obviously, we need to see how London plays out. So I'm interested to see what happens, this H4 closure is about to be very, very bullish. And then when we look at EURUSD, it's the same thing, where the more obvious points of reference are obviously here, inefficiency there, inefficiency there. But the cool thing about those areas there is like you need to pretty much find reference points. Right here, this meets equilibrium, but this meets premium. I mean premium discount. I'm sorry. This means discount, but from a full, even weekly, swing, this is more so equilibrium. So obviously, you know what I say. It's I prefer to buy, the lowest, buy lower, sell higher. Not buy high. Not buy low, sell high. Buy lower, sell higher. It's just I would really want to see this point of interest, because this just seems a whole lot more realistic to me. But there's always this in the back of my mind. So I really want to see how this plays out. And this is why I'm, loading up on sell positions here. Because obviously we don't know where this is going to react from. So I'm going to make sure I'm prepared to have positions covering me in case this first one is wrong, and even in case this second one is wrong. Does that make sense? So in order to cover myself, we know we're going to get a pullback, because we already had a very crucial structure point, break there. So all it is catching the retracement, which is what happened here, right? We came back in a premium. As you can see, probably like 60-70% retracement. And we came back to fill previous inefficiency. And there's something cool and neat to understand and pretty much look at from here. And that's the fact that, what the hell? I don't know what I just did. Okay, I'll just delete it for now. Add it back later. There we go. Much better. So here it's although we broke a structure point here, this is an H1 structure break, right? So I was wanting to buy just because I wanted to make sure that this bias was incorrect. Obviously I was already in sells from somewhere here, so I was only trying to see if the buy would occur to pretty much give me a cover for this sell position here. So the issue here was the fact that we had a ton of momentum, the first hour or so of overlap, even the second hour. So it's like from there, it's like even though I bought, I pretty much just broke even with, the break even and the loss that I took. So we came back, we got a retracement. But before we get to that, it's like a lot of people would see this as a structure break, which it technically is to an extent. But, when in doubt, zoom out. So when we look at H4 structure, right? H4 structure just cleared a pretty significant low. That's a daily low, I believe. Yeah, it's pretty much like a daily low. And the issue here is, although this, we did get a correction, right, with unsupporting volume, right? We covered inefficiency here and we cleared the previous low, but we reacted right as we got to that low. So now this is inclining me to believe that this is wanting to maybe either take out liquidity again and then moon, or give like a small pullback to then take the move to the upside. And that's here during that point of interest there, because this is looking to me, this entire thing here looks like kind of a bit like this. Looks a bit like this last year, right? Where we were given opportunities to sell, but the higher time frame structure, even here, the higher time frame structure was bullish and this continued higher. So that's exactly where I'm referencing on EU that structure point to be the deepest that I'd like to see it go here, because I know structure is bullish. So I want to look for an opportunity to buy it. Yo, nah, watch out. Hold on. Do not fucking start. Yeah, shut up. My bad. So yeah, this previous structure point is very, very crucial, because if we bounce from here, this is gonna for sure take out that high, and that's only TP1 from a swing bias, because remember, this is the daily chart. So whenever we get a big move here, we're gonna get a big move, as you can see, right? We were patient for 2 months for this move. I'll gladly be patient for another week or two to get the exact same move. Does that make sense? So it's now a patience game, where if you aren't in, be careful with risk. But if you're in, you know, every legit excuse you have to pretty much take that long bias, take it. 100% take it, because we have every reason to believe that, right? Even coming back to the monthly, like look at these wicks. Look at these wicks, you know? Rejection from a very crucial 50% here. And I'm pretty sure that was, yeah, the 2 week SC here. Even more perfect. And then the weekly, right, we had an inefficiency fill, right? So this entire thing, right, we're developing the narrative of a long bias because we rejected a monthly and weekly POI. And not only that, but we actually got the pullback. We got the full pullback here, which could be considered a type of reaccumulation. I don't really want to consider it that. It's too sloppy. And it's, I don't know, I'd have to do more research before I consider that a reaccumulation, but it's definitely not accumulation. Just because this isn't the bottom of a range. This is the bottom of the range. This was the accumulation. So in theory, this would only be considered to me a reaccumulation, but that doesn't matter, right? We're building the narrative that this is going to go long because we rejected a key weekly and monthly point. We rejected it, got the reaction, you know, got a pullback, structure break, built another narrative for the pullback, and this gave a reaction and gave a reaction here, and it gave a follow through here. So we have every reason to be long from a swing bias, right? From an intraday bias, we had pretty much a ton of reasons to short, because from a common sense standpoint, you know, this is gonna come back because we already had a structure point pretty much be taken out here. So although we took out a previous high, you know, all this could be is the retracement for that H4, right? Which is what you should be referencing. Higher time frame beats all. And from there, right, this sell position here, which I didn't catch, unfortunately, that gave you that initial move. Gave you a, you know, 95, 90, probably 98% retracement from that previous low there. So all this was a pullback to inefficiency here. Unfortunately, didn't reach that high, but let's compare DXY so you could see. DXY actually hit 50%. And remember, dollar does not follow EU, EU follows dollar, right? So this actually tapped 50%, whereas this didn't touch the fulfillment, right? So I'm gonna play that 50% here because it's dollar. And although we didn't get the full here, the fill here, if we zoom into smaller time frame, yeah, I should have hit replay mode, right? Coming into this range here, right? Your point of interest is 100% that 50%. You want to see what happens at 50%, or you want to see what happens at the fill. But you need an excuse to risk. If you have no excuse to risk, then you know you're just guessing the high, right? So when we're coming into this range, right, we're already showing. Where is, I can't fucking find it. That makes me so mad. I can't find it on there ever. Right, so we already see, you know, pretty much a bear flag, a bear flag forming, and then we get that spike up to then come down, right? But how do you actually enter here? It's like, you know, right, although we broke structure here, right? This didn't hit 50%, right? And obviously you know that optimal entry is 50%. So although we broke structure here, this continued higher because this is now just another target to then come to 50%. So it came to 50%. You could have easily put a limit, would have been like 6 pips. Too big for me. But if you wait, right, you obviously see that there's this is struggling to, come higher. And you can see it in the low volume, right? Especially in the lowest volume here, right? Almost non-existent, right? Then we get the full spike down. We get an engulfing, right? We get an engulfing on low volume, but then the follow-up candle has 0 volume, right there, 0 volume. So obviously I'm not going to take it from here, right? That's just inclining me to think that this is probably going to start to reverse very soon. So, right, your 50% was like around here. And now we've actually, after that very, very weak sign of, bullishness, we actually came down, took out a previous low, right? That I would consider a structure break because we're playing based off the narrative that this is rejecting 50% of that previous inefficiency shown. So this recovery here, look at that. Diminishment in volume. Dude, I don't know why my mouse skills suck today. I feel like a grandpa. But as you can see, diminishment of volume. Price continues higher. Instability shown. Came back, tapped premium pricing. If you look at the 5-minute, this is your inefficiency fill here. Oh, that's so annoying. This is so annoying without being able to scroll. But as you can see, right, this last wick here is your entry. Anywhere in that wick there is your entry, and your SL you can be conservative, and you can do 4 pips or maybe 3.5. Me personally, as long as I'm not below 2, like I'm straight. So if I'm a bit over 2, that's fine. So I know that if this is the inefficiency fill here, this is potentially maybe an SC here, or there's maybe an SC in that previous wick here. So my SL is going to be about 2 pips here. With add spread to that, it'd probably end up being 3 pips. All right. So from there, as you can see, price instantly melts and you're set. Off the bat, you break in a very crucial structure point here. So break even stop. Now you write it. You could even take 10-15% of your position there. Right? Your next target here. This is your very crucial target. This is where you can easily close or just take out 50% of your position and then hold the rest. Honestly, that risk parameter is up to you. It's because I don't know if you guys remember, but I spoke on that before, and it really depends on just you and your lot sizes and you and your account size. Like I said before, it's like if you have a $50,000 account and you're risking 1% on 3 pips, let me just do the math on that real quick. 50,000, that means $500 for 1%. 500 divided by 3, $167 per pip. So that's about 17 lots. All right, so you're 17 lots deep, right, on a $50,000 account. You're 17. Let me just write that there. 17. Whereas if you were in a $10,000 account, right, 17 divided by 5, that's 3. You're about 3.5 lots. Right, so if I'm 17 lots deep, I'm going to close out at least like 5 lots there. Because that's actually a lot of bread. And that's actually not even close to, that's probably less than half of the original position. That's like 30%. Whereas here, I'm going to close pretty much try to close the same percentage wise, because you obviously want to prepare yourself for those bigger accounts. But from a growth perspective, I probably won't take a partial here on that 3.5. I'd only move my SL. Whereas here, I'd actually take some money off the table. Does that make sense? But if I'm on the 17 lots here, I'd probably take out 3 to 4 lots here, scale out a couple more lots there, and then let it ride. Because I'm still going to ride out with even more than the original of this position, right? So, and the only reason why I'm saying that, obviously it's not really following rules, but the reason I'm saying that is just being realistic here. When you're looking at that much cash, you're going to close. I don't care who you are, you're going to close if you're looking at that much cash, right? If 17 lots and you pretty much smash 15 pips instantly, right? That's 170 times 15 pips. That's over $2,000, right? And instantly, pretty much. And then the following target, if you even decide to hold here, it's like 32 pips. 32 pips times, pretty much $170 per pip. That's $5,000, right? So I'm obviously gonna be inclined to close because I've experienced so much shit. Whereas I should have closed trades where I didn't, and it fucked me. Being up that much cash. But that's from the perspective of experience, and I've already gone through the smaller accounts, and now I'm talking about bigger accounts. I hope, am I making sense with that? I don't really want to rant on too much about that, but like, does that make sense? Like, depending on account size, I know how much I'm going to close. Because obviously you want to stick to rules, but you also don't want to be greedy. And finding the balance between that is like the key. Because I know if I'm dropping 20 lots on something, I'm going to take off the table as much as I can. Because I know that I can swing 5 lots for 200, 300 pips. Right? Let's see. Let me do the math. I don't want to do that in my head. Whereas if we're doing 200, let's do 250 pips on 5 lots, that's $50 per pip. That's $12,000 on a swing that you held on 30% of the original position. Right? So for people that trade lower capital, play the rules, make a set rule that either after first structure break, you're either only going to, or after the first intraday target, you're either only going to move your SL or you're going to take out maybe 10-15%, but make it how do I say it? An absolute rule. Because having that absolute rule with time will make it a habit. And that is obviously what you want. You want this to be instinctive, not where you have to think about everything you do, It helps a lot too with what? What aspect? Yeah, it does help too. It helps too. Like, also too, with lot sizes, this is a cool little tip for you guys. So I change my risk parameter every 100%, right? Which means, like, if I have $1,000 account, once I hit 2,000, then I'm gonna change the amount of 1%. So until I hit 2,000, my 1% is gonna be $10, right? Whereas then once I hit 2K, it'll be $2. Oh, $20, or whatever. Unless I'm stupid, but that way now instead of going from 100% from 1,000 to 2,000, I'm not going from 2,000 to 4,000, 4,000 to 8,000, 8,000 16, and that's the true compound effect, right? So since I play it like that, all I got to do every morning is look at my the parameter that I'm in, and 1% risk on 3 pip stop is this lot size. I have it written down already for 3 pip, 4 pip, 5 pip, 6 pip, 7 pip, 8 pip. I don't think I'll ever have an SO over 8 pips, but I have that listed, so now I don't have to think about it. So when I see the setup and it's clear there, I just know exactly what lot size I'm going to use, and boom. Yeah, bro, and that's fine. 1 to 3 is fine as you're obviously developing, but eventually you're gonna see that it's very, very possible to get a 1 to 10 on a mid-size stop loss. But yeah, you have to do what you got to do to become comfortable first, because you don't like, this is something that I actually need to like address in the course. It's like, don't come in here and literally just start trying to do everything at once. H4, POI, zoom into H1, then zoom into M15, then zoom into M1, find the perfect entry, and then play the BOS right after the reaction of that. You know, like, I don't expect you to do that, but a lot of people come in thinking they can't do that, which is obviously you can do it, but it's like, you don't learn this stuff in a month. You don't learn this stuff in 2 months. Right? A lot of you guys are seeing results after 2 months. I mean, obviously, I don't know if it's going to take you 1 or 2 months, because this is the first time I've ever had something structured, like as in the course, website, material, all that. But for me, this is not going to, you won't get this down in 1 to 2 months. Like, I'm sorry, it's not going to happen. You won't get it down in 3 to 4 months. I'm sorry. 6 months of trading straight like this, okay, I'll believe it if you're actually seeing consistent growth. But it's like, you won't get this down that fast. So you have to focus on pretty much mastering each section of the course, like, you know, as it goes. Let's see, who do I have on the call here? Let's see. Oh, I have Lee in here. So Lee is a very close friend of mine in person. So I like the approach that he's taking. I like 2 approaches of 2 guys that are in here. I like Marjan's approach. I hope I said your name right. And Lee's approach. Lee, since he's pretty much new to Forex, he pretty much takes 1 section per month. Right? He looks at every, whether it's intermediate, advanced 1, advanced 2, advanced 3. He only progresses after a month and after he knows that he's good with that. Right? And another one is Marjan. This is a different perspective. He's more experienced. But he watched the course. How many times did you watch the course? I think it was like 7. It was like, the first time he told me 5, but I know you watched it more afterwards. Was it 7? Yeah, all right, let's say 7. All right, so he watched the course 7 times before he started actually trying to analyze. And he was actually one of the first guys to sign up. And it's only been, 2 months. And he's already seeing, a 1 to 20. And I'm like, that's fucking incredible, Like, there were guys in IML. Do I have anybody here that's been for a minute besides, is Juan in here? Juan, you're in here, right? I know it. How long did it take you, bro? We have Matt in here too. He's taking him a long time. Obviously it's different for everybody, but it's just pretty much not to compare you. It's more so to show you the perspective they took and try to imitate it, or improvise it in your own way. Yeah, you see, like, there's all kinds of people in here. There's people that have been in here that have been in here with me since IML, but they slacked off. And is there anything wrong with that? No, like, that's on you. At the end of the day, I can't force you to trade. So you have to take your own approach, and 100% you have my support, 100% you have Sergio's support. All it is you just have to DM me. I don't care what anybody says about me. I have never missed a DM from anybody in the group, ever. I have always answered every DM within 12 to 16 hours. Honestly, less. It takes me like 4. And that's just because I want you to know that, like, you have my support, you have Sergio's support. Like, this is you learning at your own pace, and you have to eventually learn everything yourself. But you have the support system there. I'm not gonna hold your hand, Like, you guys know how I am. I'm straightforward. I'm straight up. Like, I don't sugarcoat shit for anybody in here. And it's like, it's probably why the word just left my fucking mind. That's why the journal reviews are actually, like, helping a lot of people, because they're actually getting raw feedback from me, and that's something not a lot of people are able to get. But yeah, that's pretty much my rant for today. There was this really nice setup today. I know Manny caught it. Happened in overlap too. I was so pissed I missed this. I wasn't looking. It was pretty much here. I think it was 5 minute. Yeah, I guess you could say here. All right, 7, 8 pip stop. Let's see. And I think that smashed like all the way to that TP at the bottom. Oh, no, actually hasn't yet. Even though that slide, that was over 100 pip move. Yeah, 150. So, I mean, that's a very solid move. But I mean, do you guys have any questions? What's up? Yeah, I'm pissed I didn't catch that. I should have caught that. Might give us a Rancher during London again. Honestly, probably. Probably. And that's also a cool thing. It's like, although EU might give you the move, EU builds you that narrative that gives you that bias. So all you have to do is find a continuation during overlap. But you have to be careful not to just chase continuations on M1. You have to also be careful for like M15 pullbacks. That's like the crucial part. I don't think I ever trade a straight up M1 continuation, because even though you're continuing trend on M1 from a M10, M15 standpoint, it can pull back into either premium or discount to then give another impulse. Do I use buy sell stops? No. Okay, yeah, I see that. The only issue here, for me, the only issue here is, let me annotate. The only issue here is that your inefficiency, ignore that, that was an ugly circle. Right, that's your inefficiency there. It was tapped here. That's what's worrying me there. So the thing is I don't want to see that be substantially broken, right? So even if it does break, I want to see how it breaks, like the speed, the momentum, and then if it actually does that, and if it actually goes down, the only reason would be is if there's instability in this upside move. If there's instability in this upside move, then we'll see a lower move down. But the issue here is that this broke structure. Obviously, we're in, you know, Asian sessions, so I'm not really worried about that right now. But that's a good point to reference. Also, a good point to reference is here. But the issue here would be that that's equilibrium, and this would be premium. So those are two good areas to mark out, and then see what happens during London, and then see how we react during New York. Yeah, it's very interesting right now, just because I'm not fully sure if this wants to go up or down. Just I don't like how this reacted and then came right back, because I don't consider that a structure break at that point. And this pretty much is looking very corrective too, which is why I pretty much just want to see like just a spike down, just to hopefully give me, you know, an excuse to buy. But yeah, let's just see how this plays out for the next couple hours, and then from there we'll go. But yeah, guys, do you have any questions? We actually have 26 people here. That's a lot of people today. That's like a fourth of the group. No, it's like, hold on. That's like a bit less than a third of the group. That's pretty good. Yeah, do you guys have any questions? First time tonight, lit. But yeah, guys, I think we'll just end it there, and we'll go I'll see you guys Saturday for Saturday Zoom. All right, guys, peace.